Now, will the S&P 500 run up higher into the NFP jobs print on Friday? Now, look at the S&P 500 here. You can see we're using Seasonax's event feature. And you can see in the 5 days before the non-farm payroll, you tend to see upside in the S&P 500. Over the last 5 years, we've seen 71.67% winning trades and a median return of just under 1 percentage point. Maximum gain has been 7.32%. And it's a quite marked seasonal pattern. You can see that the risk-adjusted metrics are solid. There's a Sharpe ratio of 2.45 and a Sortino ratio of 4.62. So this pattern does tend to perform very well in the run-up to the 5 days before the US jobs release. So with Powell at Jackson Hole Symposium saying that the labour market is cooling unmistakably and that the Fed do not welcome further labour market cooling, can we see further gains this week in the S&P 500? Now, technically, the S&P 500 isn't a great spot. See, nice trend line, bullish piercing line, and a lovely area for buyers potentially lean against. So do watch out for that as we come into the start of the week. Now, seasonal patterns, remember, there's always risks to outlooks. There's no exceptions to this. Seasonal patterns don't always repeat themselves each year, and market dynamics can quickly shift. In particular, S&P 500 upside will likely be very limited if markets start to fear fewer rate cuts, particularly if the labour market is strong. So that's a clear and obvious risk. There are, of course, others, but that's one that does stand out. Remember, don't just trade it. Seasonax it. Come along here to Seasonax for literally thousands more seasonal insights that are just waiting to be revealed.